And what's happening on the global markets. Take a look at first how Wall Street's opened. Wall Street opened almost 400 points down and is now about 350 points down in the red, about 1%. For the Dow Jones, S&P 500 down about a percentage, and the Nasdaq also down about 81 points. So that's not unusual. We've seen most global markets in the red today, including European markets, which were also reeling. The DAX, CAC, FTSE, all down about between 1% and 1.5%. So several reasons as far as Wall Street is concerned. You're seeing this fight in Washington about raising the debt ceiling. Treasury Secretary Janet Yellen warning that the US defaulting on its payments would lead to a recession. But behind all of this is this looming concern about a global energy crisis as well. So what really is happening? Let's go across to Ben Emons, MD of Medley Global Advisors. Ben, thank you so much for speaking with us today. Your take on what we're seeing in the global markets?
Good evening. Thank you for having us. Yeah, it's certainly an energy crunch that's playing through the market. Now, the natural gas market in particularly is now subject to what they call the technical short squeeze. This has not much to do with that the anticipation of inventories and supply of gas will be so low this winter, with the risk that the winter could be stronger than is currently modeled, that leads to the skyrocketing prices. But there's also some intervention at the horizon. You know, the EU leaders are getting together to discuss the gas prices. There's communication with Russia about it to supply more gas in the future. So there will be some form of intervention. Nevertheless, the market's taking it negative because gas prices do translate into higher inflation and will weaken and slow down the economy. So it's something really carefully to watch, especially going into the winter season.
Ben, give us a broader perspective, because high gas prices hitting Europe is one part of the story, isn't it? On the other hand, you have crude prices going up, you have a shortage of coal across the world, and you're seeing that result in power shortages and power cuts in China. So do you see this as an evolving situation which could worsen? Are we on the brink of a global energy crisis?
Partly this is happening just by mandated cuts, such as in China, which was instated this summer, and really just recently came to the news that they were doing that, but that it is leading to shortages in terms of coal or even gas or crude oil, for that matter, not coming enough online, even though there's enough supply out there. Does give you the feeling that the energy prices may have more upside from here, and that indeed could affect output globally in a negative way. And that, I think, is what markets are judging this morning. The equity price are really down for that reason. If output and production really go down because of high energy prices, such as the numbers out in Germany this morning, it starts to hit profit margins. And if you then add to that we're already dealing with a supply chain problem as it is from the pandemic, it only exacerbates this issue. So I think markets are nervous that the combination of limited supply, price pressures, as well as shortages of inventory, that I think is what really makes markets nervous, that we're going to get a spike in prices that then really is going to cripple markets. So for now, we're seeing mild sell-off, but it's a test of where we could go from here.
So what is the outlook looking like, Ben? October is traditionally a volatile month for US markets. Do you see some of these factors persisting?
It is a traditional month of volatility, as you mentioned. But I would mention too that the volatility for the moment is very much still below from where we were last year. So let's see how it develops, because we have other things going on, like the debt ceiling in the United States. Even though that does look to be resolved in a number of weeks from now, it will put pressure on markets interim. And so as this energy crisis, as we speak to, does move on from here, I think you can expect a more volatile October as well, until it really clears. We have to recognize that as much as all of that is happening, there's still not material weakness really in economic data, specifically United States, employment data today was good, and the employment report on Friday may also be strong. So it still shows a lot of momentum, but it does come with volatility as the uncertainty about the energy crisis and how it impacts the economy will just overhang markets.
Absolutely. Thank you so much, Ben Emons, joining us there and giving us a breakdown on what's happening in Wall Street today. It's pertinent because the concerns that are being seen by investors in Europe and America are shared across the world as well, as there is a resurgence in activity post-COVID-19. Countries are emerging out of that crisis at different paces in different parts of the world, and usage of electricity, of energy, is increasing as mobility increases, as demand increases. But the supply is seeing another constraint which could get a little difficult to handle.